Hi, with me, Miss Walia, we look at Banking Theory Unit 5 in this lesson. Um, this lesson is all about financial services, so that is what we look at in this lesson. Okay, so we'll start by looking at the meaning of financial services. The term financial services, in its broad sense, refers to mobilizing and allocating of savings. It is identified as all those activities involved in the process of converting all the savings that an individual has, that a business has, into investment. Okay, so financial services also include financial intermediaries such as merchant bankers, venture capitalists, commercial banks, as well as insurance companies. That's only to name a few. Okay, next we'll look at the scope of financial services. So financial services covers a wide range of activities. They can be broadly categorized into two parts, which are namely traditional activities and modern activities. So the scope of financial services um, can be put in two categories, which are traditional activities and modern activities. So we'll start by looking at the traditional activities in detail, then we'll go to the modern activities afterwards. Okay, so traditional activities, um, conventionally, the financial services are identified under two heads under the traditional activities, okay, which are fund-based activities and the non-fund-based activities. Okay, so with a fund-based traditional activities, um, Uh, these are services that are used to acquire assets or funds for a customer. Okay, the fund-based activities they require assets or they are used to acquire assets or funds for the customer. Okay, so when we say fund-based activities, uh, it is we mean a specialized method of providing a structured working capital and term loans that are secured by account receivables, inventory, machinery, equipment, and real estate. If you see all those we're looking at, these are assets we're talking about here. Okay, so fund-based financial services, uh, we can say it's a financing method uh, that is driven by assets of companies. Okay. Now, in a fund-based financial activity, during sanction, there is an outflow of funds from, let's say, the bank, which is a financial institution, to its customer. Okay. Then a non-fund based activity, it is where when there's a time of sanction, there is no outflow of funds from the bank to its customer. Okay, so the traditional services which come under fund-based activities are as follows: underwriting of shares, debentures, to name a few, dealing in foreign exchange market activities, then you have equipment leasing, hire purchase, and venture capital. Then we also have dealing in secondary market activities. Then lastly, we have participating in money market instruments like treasury bills, discounting bills, and commercial paper. Okay, non-fund based activities, I've talked about what that is. So in this in this financing method, when there is sanction, um, there is no outflow of funds from the financial institution to its customer. Okay. So the management of capital issues, there is pre and post issue management that's under non-fund based activities. So those are the non-fund based activities. Okay. Then there is arrangement for the placement of capital in debt instrument with investment institutions. And next we have arrangement of funds from financial institutions. The next point is placement of capital in debt instruments with investment institutions. The next is arrangement of working capital for his clients. And lastly, we have assisting in the process of obtaining government clearance. Okay, so these points are under non-fund based activities. Those are the non-fund based activities. Okay, that happen uh, in the traditional activities. Okay, so traditional activities, don't forget we have non-fund based activities and fund based activities. Okay, so the modern activities has a scope of financial services is the next thing we'll look at. So modern activities include rendering project advisory services, right from the preparation of the project report to the raising of funds for starting the project. Okay, so right from the start of preparing the project report up to the time when it's time now to raise the funds for the projects that has been suggested. Okay, so modern activities include the rendering of project advisory services. Okay, then next is planning for mergers and acquisitions and assisting for their smooth carry out. So this is another modern activity in the scope of financial services. Okay, there is planning for mergers and acquisition and assisting for their smooth carry out. Okay, so financial services help this modern activity in particular helps in planning for mergers. Let's say two businesses, we have business A and business B. When they want to come together and operate as one company, that is a merger. Okay, so modern activities help in planning for such. They plan for mergers and acquisition and assist for their smooth carry out. Okay, so these measures they help until um, they are carried out smoothly. Okay. Then we have directing corporate customers in capital restructuring. Next point is acting as trustees to the debenture holders. The next is recommending suitable changes in the management structure and management style um, to achieve better results, of course. Then there is portfolio management of large public sector undertakings. Then the last point here is capital market services such as clearing services, registration and transfers. Then we also have collection of income and securities. That's going to be a few. Okay, so that is it about modern activities as a scope of financial services. Okay, the next we'll look at the nature as well as the characteristics of financial services. Okay, so financial services involve at least two people or firms, the service provider and the user. Okay, so that's characteristic or nature for financial services. There should be at least two people involved. Okay, the provider of the service as well as the user of the service. Okay, um, a bank, for example, is a financial institution. Okay, so for business to operate smoothly with the bank, for that service that they offer as a bank, there should be at least um, a customer who's going to be the user of the service, like the services that the bank provides, and the bank, of course, who is the provider of the services. Okay, so that is it about financial services. It involves at least two people, which is the service provider and the user, right? Then financial institutions intermediate the flow of funds between different economic decision-making units. Okay, so the financial institutions intermediate the flow of funds between different economic decision-making units. Okay, so financial institutions like a bank, again, I'll give that example, act as intermediaries, as middlemen, okay, to they act as middlemen between uh, different economic decision-making units in an economy. Okay, so they act as middlemen to bring different economic decision-making units together or to transact. Okay, so they act as middlemen, right? That's intermediates there. Then the financial services are intangible. That's another characteristic or feature. It smoothens the function of the corporate sector by providing funds within the stipulated period of time. Okay, so the financial services are intangible. You cannot touch. It's just a service that is provided. You cannot touch it. You cannot see to say that is financial um, services happening there. But it is a process that happens and it smoothens the functioning of the corporate sector by providing funds within the stipulated period of time. Okay, so funds are available to customers when they need them. Right, and financial services must be customer friendly and they should provide the services according to the requirements of the customers. Okay, so this point, financial services must be customer friendly. Let's say as a customer to bank A, and I need a loan from that bank. So financial services should be friendly to me as the customer to that bank. Um, it should provide the services according to my requirements as a particular customer to that financial institution. Okay. Then the last point here is financial service is an innovative activity and requires dynamism. It has to be constantly redefined and refined on the basis of economic changes. Okay, so just as an economy is undergoing some trends, financial services also should be innovative. They should be redefined. They should be redesigned. Technology changes almost every day. So even financial services, it should be like that. It should have some dynamism in it. Okay, it should keep changing just as the economy is undergoing some changes. There is an advancement in technology, just like that. Even financial services should be innovative. They should bring something new. They should be developing to meet the needs of the customers. Okay. Then classifications of financial services. Classification of financial services industry. Okay, that is the next item we look at, the classification of financial services industry. Okay, so the financial services industry can be conventionally classified into two categories. We have the capital market intermediaries and we have the money market intermediaries. Okay, so consisting the capital market intermediaries consisting of term lending institutions and investing institutions providing long-term funds. Okay, so with capital market intermediaries, they provide long-term funds. Okay, then the money market intermediaries include commercial banks, corporate banks, and other agencies which supply funds for short-term requirements. Therefore, the term financial services include all kinds of organizations which intermediate and facilitate financial transactions of both individuals as well as the corporate customers. Okay, so classifications of financial services industry will have two. There's capital market intermediaries and money market intermediaries. With capital market, um, the lending institutions and investing institutions provide funds on a long-term basis. Then with a money market, the funds are provided on a short-term basis. Okay. Then next, okay, so those are the classifications. Then the entities that provide these services are divided into the following categories. Okay, so the entities that provide the financial services are divided into the following categories. There is non-banking finance companies, that is NBFCS. Then we have the commercial banks, and we have the investment bank. Okay. The functions of financial service institutions. What are the functions that these financial service institutions provide? Okay, so these firms not only help to raise the required funds, but also assure the efficient deployment of the funds. Okay, they do not only help to raise required funds, but also assure efficient deployment of funds. Okay, then the other function is they assist in deciding the financing mix. The financial service institutions assist in deciding the financing mix. How are we going to have our finance as a company? The financial service institution will help to decide what type of financing we are going to use. We're going to use loans. Are we going to just get an overdraft from the bank? Okay, or are we just going to sell our shares as a company? So the financial service institution will help with deciding the financing mix that an individual or a company may use. Okay, then they extend their service up to the stage of servicing of lenders. They extend their service up to the stage of servicing of lenders. Next function is they provide services like bill discounting, factoring of data, packing of short-term funds in the money market. There's e-commerce, securitization of debts, and so on to ensure an efficient management of funds. Okay. Then the last point here is in the functions is that these firms provide some specialized services like credit rating, venture capital, lease financing, factoring, mutual funds, merchant banking, stock lending, depository, credit cards, housing finance, and so on. These services are generally provided by banking companies, insurance companies, and stock exchange and non-banking companies. Okay, so those are the functions of financial service institutions. Then we will look at the constituents of financial services. We have four named here. So the financial services comprises of the following major constituents in the financial system. These are financial instruments, market players, specialized institutions, as well as regulatory bodies. Okay, so those are the four constituents of financial services. Right. So we'll start with the financial instruments as a constituent of financial services. It includes equity, debt, and hybrid. These instruments are written evidences of ownership, and they give the holders the rights to demand and receive property not in their possession. Okay, so that is it with equity, debt, and hybrid. Then we have the ownership of a corporation is divided into various units, and each unit is called a share. Okay, so a company is divided into various units. Each unit is called a share. Okay, a shareholder, a shareholder's interest is the shareholder's interest is evidenced by stock certificates, which states the name of the shareholder and class of stock and the number of shares owned by that shareholder. Okay. Debenture is a certificate used by the company under its common seal, acknowledging the debt to be repayable with interest. Okay. Hybrid instrument is the combination of both equity as well as debt instruments. Okay. So that's it about financial instruments. Then we have the market players as constituent of financial services. The players in the market include commercial banks, we have financing companies, stockbrokers, consultants, underwriters, as well as market makers. Okay, commercial banks. The commercial banking in the developed countries provide term loans to corporate sector by participating in the capital and equipment finance. The commercial banking has undergone a number of structural and functional changes in the developing countries. The Zambian banks have recently commenced hire purchase finance, leasing, factoring, and other services. Okay. Then financing companies, what are these? The participation of finance organizations can stimulate the economic growth. Okay, so the participating of finance organizations can stimulate the economic growth of a nation. Okay, they inject new blood to the corporate sector. All these reflections made for the evolution of a vibrant, competitive, and dynamic financial systems. The non-banking finance corporations sector has recorded marked growth in the recent past. Okay. Then we have the stockbrokers. Stockbrokers play an important role in the stock market. They involve um, in buying and selling of securities in a recognized stock exchange. If anyone wants to work as a broker, a certificate of recognition from the Securities Exchange Board is mandatory after satisfying all the terms and conditions that the Securities Exchange Board, of course, will require for that individual to be able to participate as a stockbroker. Okay, Securities Exchange Board will grant the registration to the brokers. The membership in the stock exchange can be granted as individual membership as well as corporate membership. So, as an individual, someone can be granted the certificate to play as a broker. Then also has an institution, has a corporation, membership can also be granted. Okay, so that's it about stockbrokers. Then we have consultants. Consultants are the professionals in the area of finance, can be providing best solutions to the problems faced by the corporate sector. Okay. So I'll just read through that again. Consultants are the professionals in the area of finance who can be providing best solutions to the problems faced by the corporate sector. Okay, they are pioneer in their field and render the quality service with high integrity and standards. A financial consultant uh, occupies a key role in problem solving, like in all areas of financial management, such as production, finance, marketing, and human resources. Um, their services are intangible and show greater impact on the functioning of the company, and they provide tailor-made solutions to all problems, irrespective of any area. Okay. Okay, so the consultants, these are professionals in the area of finance, and they can help um, individuals as well as corporations um, by providing the best solution to the problems that are faced in the corporate sector. Okay. The next we have underwriters. Underwriters are the intermediaries in the primary market. They provide assurance to the companies which approach the capital market for raising the financial resources. Okay. They render valuable services to the newly started companies. So if a company is new, the underwriters render valuable services to newly started companies, um, which require believable advice. Okay. Underwriters assure the company full subscription for a commission. All right, then we have the market makers. Okay, market makers are associated with the stock exchanges. They market, the market making system is very much popular in London, for example, New York and Chicago stock exchanges. Okay, even here in Zambia we have the Lusaka Stock Exchange. Okay, so their basic function is to provide the needed liquidity to particular script. They help in eliminating the temporary disparity between the supply and demand of script. Okay, they help in maintaining a fair and orderly market. So these are the people who make up the market. They're the market makers. Okay. Then we have specialized institutions as the third constituent of financial services. Financial services area meant for providing solution to various problems faced by the corporate sector. They provide the provider of financial services remain in constant touch with the dynamic market. Dynamic markets, the market that keeps changing. The financial markets are required to develop specialized institutions to solve financial problems of the corporate sector. These specialized institutions include acceptance houses, discount houses, factors, depositories, credit rating agencies, venture capital. Okay. These institutions provide solutions to the financial problems of the corporate sector. Okay, so these are the specialized institutions involved in the financial market. Okay, and then lastly, the constituent is regulatory bodies. Okay, so regulations are the most important factor in any area of financial system. The financial markets are highly volatile and need a close observation by the government. The government of Zambia watches the market affairs on daily basis through in which is Securities Exchange Board. The government regulates the financial systems through various legal organs of the administration. The banking affairs are monitored by the RBI. The corporate affairs are regulated by Company Law Board and Board of Industrial and Financial Reconstruction. Okay. Then we have merchant banking. This is another item we'll look at. It's okay. So what is it about merchant banking? After 1990, the new economic policy adopted by the government has resulted in the promotion of a number of new companies. This has resulted in the enlargement of capital markets. The government abolished the office of Controller of Capital Issue and the regulation of stock market was taken by the Securities Exchange Board. In such a situation, to link the investors on the one side and cater to the needs of the entrepreneurs on the other, a new organization came into existence called Merchant Bank. Okay, so he is able to raise capital from the investing public and provides the same to the companies in need of them. Thus, a merchant banker is one who is a critical link between a company raising funds and the investors. Okay, then merchant banking. What is the meaning of merchant banking or merchant bank? Merchant banker is one who underwrites corporate securities and advise clients on issues like corporate measures. Okay, so the merchant bank may be in the form of a bank, it may be a company, firm, or even a proprietary concern. It is basically service banking, which provides non-financial services such as arranging for funds rather than providing them. Okay, so no wonder um, it can be a bank, it can be a company, or a proprietary consent. Okay, because it's about arranging funds that are needed by a customer rather than providing those funds. Okay, so the merchant banker understands the requirements of the business concern and arranges finance with the help of financial institutions, which are banks, stock exchanges, and the money market. Okay, so that's the meaning. Then you have functions of merchant banking. There's corporate counseling. Merchant bankers provide counseling services to companies with regard to their timing of issue of shares, capital structure, and other promotion aspects with regards to the company. Okay. Then we have project counseling. Uh, that's another function of merchant banking. Here, the new entrepreneur is helped with the conception of idea, identifying various projects, and preparing of projects, feasibility reports, checking whether the project is feasible enough to be achieved by a corporation or a firm. Then we have location of factory, obtaining funds, sanctions, approvals from state and central government departments. Okay, then there's portfolio management. In portfolio management, the merchant banker helps the investor in matters pertaining to investment decisions, taxation, and inflation are taken into account while advising on investment in different securities. The merchant banker also undertakes the function of buying and selling of securities on behalf of their client companies. Then shifting of investments is done in such a way that it ensures maximizing returns and minimizing of risk. The foreign investors are given more services as they have less knowledge about the domestic market, and the merchant banker has to give the maximum returns for investment. Okay. Then the next function is issue management. That is obtaining clearance, drafting of prospectus, underwriting liaison um, with brokers and bankers, and keeping constant communications with investors. That's another function of merchant banking. Then the other function is credit syndication. Okay, when the funds required are more, different financial institutions are combined for contributing working capital and fixed capital requirements. The credit worthiness of borrowers is more um, represented by the merchant banker to various members of the credit syndication. It is also called consortium finance. Okay. Then the next function is working capital. Concerns are given working capital finance depending upon their earning capacity in relation to interest rates prevailing in the market. Okay. Then the venture capital is the next function. Venture capital is a kind of finance wherein a new venture proposed by an entrepreneur is financed. Venture capital carries on risks, and hence very few financial institutions come forward to finance. As the risk involved is more, the technical competence of the entrepreneur is an important consideration, or it's an important condition, sorry, for the venture capital finance. Okay, then the next function is capital structure. Here, the amount of capital required, raising of the capital, debt equity ratio, issue of shares and debentures, working capital, fixed capital requirements, and etc. That's the capital structure. Then we have lease finance. The leasing companies are provided with finance for the procuring of different assets which are required by different companies. It is a form of finance employed to require use of assets. Okay, then the next function that we have here is fixed depositing. Merchant banks will enable companies to raise finance by way of fixed deposits from the public. Okay, the companies will have to fulfill credit rating requirements, which the merchant banker helps the borrowing company to fulfill the required conditions. Sorry. Okay, so fixed depositing is another function of merchant banking. Then we have the role of merchant banking in the corporate sector. That's the next item we look at, the role of merchant banker, sorry, in the corporate sector. What does the merchant banker do in the corporate sector? So we have the first point, the merchant banker plays a very important role in the corporate sector of Zambia. Following are some of the important services. Okay, so that's just the heading there. So number one, merchant banker provides a good scope of investment counseling. That is to say, it helps even foreign companies for entering into joint venture with Zambia companies. Okay, so it provides a good scope of investment counseling. Okay, so merchant bankers provide a good scope of investment counseling. They counsel entrepreneurs who want to make investments. Okay, be it entrepreneurs of the country or foreign companies that want to enter into a joint venture with the Zambian companies. Okay, then the next point is project finance. That's the other role of a merchant banker. Decisions to undertake a particular project, sanction, modernization, only to name a few, are undertaken on a package basis. Okay. Then we have working capital, that is existing as well as new ventures are provided working capital by merchant banks. Okay, so that's another role of a merchant banker. Then we have foreign currency finance. Zambia companies are helped by merchant bankers in mobilizing foreign funds through the issue of global deposit receipts. Then we have capital structure counseling. Companies are advised by the merchant banker on capital structure, from the capital to be raised, terms and conditions for issue of shares, preparation of prospectus, and etc. Okay, so merchant bankers also help in counseling on capital structure. Okay, then we have underwriting. What is underwriting? Underwriting agreement may be defined as an agreement entered into before the shares are brought before the public. That is in the event of the public not taking up the whole of them or the number mentioned in the agreement. The underwriter will file an agreement commission, take an allocation of such part of the shares as the public has not applied for. Okay, so we have different forms of underwriters. We have underwriters in Zambia in different forms. These are development bank, such as IDBI, IFCI, SFC. That's only to name a few. Then we have investment institutions such as LIC, UTI, etc. Then we have commercial banks such as SBI, Corona Bank. And then we have stockbrokers who also undertake underwriting. So those are the different forms of underwriters. Then we have advantages of underwriting. What are the merits of underwriting? So underwriting ensures success of proposed issue of shares as it provides own insurance against the risk. Okay, in case there is any risk, then it enables the company to get the minimum subscription required, as even if the public fails to subscribe, the underwriters will fulfill their commitment. Okay. Then the next advantage is that the reputation of the underwriter acts as a confidence to investors. Okay, so when an underwriter is well known for his services, of course, uh, that reputation of that underwriter acts as confidence to an investor. Okay. The underwriters who are called the lead manager provide financial soundness of the company whose shares are issued to the public. Then the last advantage that I have here is the successful underwriters bring reputation to whose shares are being issued on the market. Thus, the reputation of the company also is improved as the underwriter brings a reputation to whose shares are being issued in the market. Okay, so that is all for this lesson. Thank you very much.